This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Joining us today is Charles Fitzroy, the CEO of Bradda Lithium. Hello, Charles. How are you doing?
Very good, Mark.
Well, it's good to be speaking to you. It's the first time that we're speaking on Stockbox, Charles. And of course, some recent news from the company, updated Basin East mineral resource estimate and exploration target, resulting in a 65% increase in contained lithium. But before we discuss the latest news, could you perhaps briefly introduce the project for us?
Yes, so the mineral resource is on a portion of our Basin project, which is one of our two lithium clay projects in Arizona. We as a company have a suite of lithium projects. We've got lithium clays in Arizona, lithium pegmatites in Arizona, and also lithium brines up in Nevada. We listed last year on AIM in July, a very good IPO. And since then, we've had a really good start to our listed life. We're up about 170%. Our share price is up 170%. And this is the first big catalyst of the year for us.
Okay. And is this project, would you say this is your flagship project or not necessarily?
It's definitely the project which we're most advanced on. Our pegmatites, which we'll be drilling in June this year, is a very exciting project as well. And also our brines up in Nevada. It's very hard to say one's flagship. It's just definitely based on we have the most knowledge and it's the most advanced and we have a resource on it. So in that respect, we've got a 6 million ton exploration, up to 6 million ton exploration target on it. So it's a really sizable potential with the asset, with the company right now.
Okay. So what was the previous resource estimate on this project then?
So yes, the previous resource, the JORC resource, was 185,000 tons of lithium carbonate equivalent, LCE. Now we've increased that by 65% to 305,000 tons of LCE. And we've also added an exploration target of up to 6 million tons of LCE across the Basin project. So that's a really, really good size target for us to be chasing. The resource is at our portion of Basin project called Basin East. We are now in the process of doing a follow-up drill program, Basin East, and we're in the process of permitting for Basin North and Basin East extension. We'll be drilling in Q2 this year. And this will form part of a bigger resource later this year. But the key thing that comes out of the resource we've just done, we identified two things. One was the upper clay zone is much higher grade than the lower zone, and it thickens to the west and northwest. And also within that the upper clay zone, we have a high grade unit of 1300 ppm lithium, and that's about 20% of the whole resource. So now our current drilled area at Basin project covers about 2.4% of our sedimentary claims. Previously, it was 1.9%. So we've increased our resource from 185,000 tons to 305,000 tons for a very small increase in drilled area. So that's really good for us. And the geophysics we've done last year, this drilling, the mapping, has enabled SRK, our consultants, to put this exploration target between 1 and 6 million tons of LCE. So now, as a company, we're going to be chasing that higher grade upper zone, trying to chase it, follow it, where does it go, into other claims, to try and develop it and increase that. And that's what we're focusing on for the next 2 years, 1 year, is understanding more about our resources at Basin, how they develop, and how we can make them most best project possible.
Okay. And I understand that 23% of this resource is now in the indicated resource category, which is the one more advanced, more better than inferred, isn't it?
Yes, that is a very key thing as well. So from the greater confidence, SRK, from the work we've done, from the geophysics, it has enabled them to increase a portion of it up to indicated category. And that is something we're going to do as we go forward, is try and make much of our resources possible in that higher category. And then eventually we'll get into a measured category, which is vital for economic studies.
Okay. So this is early stage exploration, but clearly you have found a deposit which has now been upgraded in the recent resource estimate. You've said that you're going to be following the higher grade stuff. Is that where the focus is going to be? I mean, at what stage do you sort of start considering that this could look like a viable mining operation?
Well, the key thing about the higher grade unit is it is in the upper part of the deposit, so it's closer to surface. The actual lower grade portion, the lower zone, is the deepest part. So it's great news that this upper zone is in the higher portion. we're going to be evaluating the deposit, and we're looking for all the lithium there. So we're going to be creating a resource over the whole area. But understanding where the high grade unit goes and the low grade unit goes is vital for any mine plan. The fact the high grade unit is closest to the surface, potentially we could mine that earlier on in the mine plan, and it would enable us to give us greater cash flow up front to be able to pay back any debt and capital. So that's a very good thing. The fact we've found that high grade unit and the fact it is nearer the surface than the low unit. It's a vital thing for us as a company for the project economics potential.
And just on the economics, when can you start putting some numbers on this and perhaps moving to start the early stage feasibility studies?
We're planning to start that next year. That is what we're doing next year. We're starting an early stage technical study, so a preliminary economic assessment, a PEA, or a scoping study next year. And that's what we're working towards as a company.
Okay, that sounds good. So you have suggested some of the next steps and the roadmap, but if we could just set out the key milestones for this year, is it further exploration and drilling on the higher grade area?
It'll be further exploration on the whole claim block at Basin. So we want to identify what's there. So we're permitting Basin North, Basin East extension. So we'll be drilling them later in Q2, and also the follow-up program at Basin East extension. So that'll be keeping us busy at Basin. And also we've got a lot of other stuff going on at other assets. We'll be drilling up at our brine asset in Nevada at some point in Q2. Be doing a shallow drill program there to identify if there's a clay potential as well as brine potential. We're not sure. We've done geophysics there and deeper magnetotellurics to understand what's going on there, which has identified potential reservoir and also potential clay at surface. So our assets in Nevada could be clay and brine, we're not sure. And then also in June this year, we'll be drilling at our pegmatites, which is really what we're very excited about as a company. You know, the pegmatites there, they were mined back in the 1940s and 50s. We know there's pegmatites there. We know the grades are good there. We've done grab samples, we've done surface samples, and we were doing 3D mapping. And we've done some geophysics there, which identified that the pegmatites do go down deeper. And the whole thesis was that the pegmatite, our San Domingo pegmatite asset, is similar to a zone pegmatite system like Kathleen Valley in Australia, which is Liontown Resources Zone, whereby you have this sort of small pegmatite to surface going down to deeper feeder systems at depth. And that's what we're trying to identify. And we'll be drilling there in June. And if we work out that there is a viable pegmatite operation at San Domingo, then I think we could have a re-rating as a company, because the market really understands pegmatites and it really understands brines. It's still getting its head around clays because, fair enough, there are no commercial clay operations out there right now. Bacanora is getting very close, as are other projects in the US. But pegmatite mining accounts for 60% of the world's mining. It'd be relatively easy for us to get into production for a pegmatite project where we're producing a spodumene concentrate, which is an intermediate product rather than an end product. So for us, the pegmatites are really exciting. Obviously, Basin, we're going to keep increasing our resources this year, understanding more about our process and technology. And then the brine assets, we need to do more work on to understand more about them. But, big year ahead for Bradda. Resource growth at the clays, understanding more of the pegmatites and brines. And really good year ahead. We've up 170% since we listed last year. So we're going to continue in that same way and keep working hard.
Okay, well, it certainly sounds like there's a lot planned, and the rest of the year is full of exploration. In terms of sort of objectives of where you'd like to be at the end of the year, is it really, to sum it up, to really understand more about the deposits you've got and build on resources? Is that fair to say?
Yeah. This year is last year was a very solid year to understand more about the assets, doing geophysics, initial drill programs. We understood what we needed to do and we made plans. And this year is all about following on those plans. And this year is going to be development of resources and also, as you said, understanding more about the other assets to work out where we are and what value we have. Hopefully we should have an idea of the scale of the pegmatite project by H2 this year, and the brines as well, hopefully similar sort of thing. So it's all about identifying that this year and growing our resources where we have resources.
Excellent. Okay. Well, that sounds good. I look forward to following the story. Just a final thought, perhaps from you, Charles, just on the lithium market and pricing. Can you obviously keep a close eye on it, I assume. Where do you feel it's going?
That is a hard question to answer. It still keeps on going up, doesn't it? Which is I'm very happy about. But I think it probably has to be some correction at some point. It can't keep going up. But what I understand and what the market seems to have a similar opinion is that we are in a situation where estimates from a year or so ago when they were estimating, $12,000 a ton long-term price. Most forecasters have moved that up to 15 or 18 or even 20. So the long-term price is increasing. And that's great for us as a company. It makes our projects more economic and better returns potentially. So, that's fantastic for us and for all lithium producers. And the fact we have a suite of lithium assets, clays, brines, pegmatites, enables us to target all areas of the market because we have the ability to produce carbonate and hydroxide from different assets. And that, for us, the price is very positive and the long-term outlook is very positive as well.
Good. Okay. Well, Charles Fitzroy, the CEO of Bradda Head Lithium, thank you very much for your time.
Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.